All right, traders, welcome to today's recap. This is Christian from Harvard's Tribeca Trade Group, and today is Tuesday, September 4th. So I will do a quick video here because it's a little bit later in the day. We had a member-only webinar right after the close today, so that's why this is a little bit delayed. But really, today was it kind of seems like a tale of two different markets or a few different markets because you look at the overall indices, right? SPY was down today, Qs were down almost a 0.5%. They came back pretty nicely, as well as small caps, which were down 40 basis points. But you've got some names that continue to break out, and there's a lot of momentum out there. You just have to find these stocks and then just kind of let it ride with this swing that these guys are on. So we hear the term a lot of time. It's a stock picker's market. That doesn't mean it's easy, right? I mean, if you look at the market breadth for the day, you could see it was negative. NYSE was negative ARCA and was positive NASDAQ. So, what this means to me is that you really have to be nimble in this market. And if a name is not working for you, I would rather not struggle with the name, and I would rather go into some names that are moving like this, right? So the more nimble your portfolio is, a quick couple of sentences about what I did towards the end of last month was I took off a lot of risk. I really had a huge month in August in terms of P&L. I got everything that I was looking for, in terms of P&L. I thought that we were a little bit extended, and there's a lot of global things that are still not resolved. So, I think you kind of have to be pretty content with what we've had the last couple of weeks, and that's why I took off some risk. Also, one of the things that I look at is when the 5 period moving average gets way above the 20 in the major indices. Usually that's a place for me to take some profits, right? Anytime there's some big separation, it usually doesn't last for that long, and usually the price comes back in, and the 5 and the 20 either cross or they get very close to one another. Right now, I see big separation. That's why I took off some risk. And then what I do once we start to get that dip, even though today was just a small dip, I look to kind of redeploy some of that risk into some areas that have some nice momentum to them. Also, it really lets me look at the market objectively. This way, I'm not hanging on to trades that I'm kind of waiting for a long time to work. Sometimes I'd rather just start fresh and to kind of be able to go into some new opportunities without paying attention to the ones that just are not working. Remember, nobody's trades are going to all work together. So you cut the losers that aren't working and you concentrate on the ones that are moving up very nicely. So we'll start out with some of the best performers of the day, or where there's some really good strength and outperformance in the market. Amazon, really outpacing all the other FANG stocks. I mean, look at Google. Google's now been down 3 days pretty decently. From 1260 all the way down to 1211. Same thing with Netflix. It's been kind of struggling the last couple of days. It looks like it might roll over here if it doesn't hang on. So it's doing, I'll say, consolidation. I think as long as it hangs on to this, it's okay. But it's looking like it's kind of rolling over. So we need some buyers to come back in. You could see on the 1 hour chart, bottom of value is 363. I would pay attention to that. If it breaks through there, I would be careful on your longs. I am long Netflix right now, and granted, it's not working. Facebook also down 2.6% today, right? So you can't just sit in the fangs and think that you're going to get relative outperformance. It depends, obviously, which one you're in. Same thing with the semiconductors. AMD has just been on an absolute rocket to the upside. All kinds of call activity in this name the last couple weeks, and they keep going after it. Also, NVDA, right, also has been seeing the same type of thing, maybe to a little bit of a lesser extent, but very, very strong. These are good signs for the market, too. The fact that people are buying chip stocks. The overall SMH, right, when everybody thought it was going to break down, it turned and has been in a nice upswing since then. Qualcomm is another one that we've been seeing a lot of option activity in as well, and that's been very strong and moving to the upside. We've got a couple other names that report this week, but Marvell, I think, reports later in the week. But again, really, really strong. I think I already mentioned this name, but Stitch Fix, a name that I'm long right now, up 6.6%. The other name that I've been talking about in terms of CVNA. Carvana, these guys are disruptors. What do disruptors do? They go up basically on all time frames, up another 4% after being up in a flat market on Friday. So again, this is where the strength is in this market. Disruptors. Also, the application enterprise software group was very strong today. That went from low to high. So you look at names like Hubs, a few other names. I'm not in this one, but I'm in not Workday, Data, which was very strong. Look at Coop after hours. I think this name is up at $80, which I am long for earnings. I put on a 75-80 call spread, so I'm right where I need to be in that call spread. On the other hand, Workday has fallen here a little bit. We talked a little bit about this name as we go over all these names in the trading room for setups, even the ones that I don't take. And one of the things that I said was this name was way too overbought. I cannot buy a name on an 83 RSI, which is what it was going into today. So I skipped this one. I was actually looking at selling call spreads in it, but the implied move was pretty light in this. So there wasn't a ton of premium to collect there. Also, Restoration Hardware, I did sell huge move that they were implying. I think the option market maker was implying a 17% move. So just colossal move. I am short the 150 145 put spread, so I do need this to finish. I collected about 250 on that trade, so it's right around my break even, actually a little bit lower than my break even. I do need this thing to get above 150 by Friday. I think they had some mixed numbers. Overall growth was strong, but I think their sales numbers were their guidance was a little bit low. All right, so that's it. I think for today's recap, just 2 minutes on option flow. EA, I think, looks interesting down here. Again, another testament. There was a nice EA call buyer in this name. There was a nice win call spread that went up. But with a lot of names, you can get in. You can get in cheaper than what we see on the tape. There was more SF Stitch Fix calls that went up today. A lot of AMD going up today. Big call buyer out in January in Fiat Chrysler. A little bit more of Micron Box. Home Depot, I forgot to mention this name, kind of hurricane season trade. We talked about this pre-market. I tweeted this out. I see a lot of other people tweeting this out later in the day. That's fine. But we talked about this pre-market, and I think a real nice play. And also possibly a breakout here in Home Depot. There's a couple other names to maybe take a look at. There's a cement maker, Summit Materials, that saw call buying last week, but I think Home Depot is worked before for me during hurricane season. Generac is another name that people flock to during hurricane season as well. All right, so that's it. A little bit of a shorter than normal video, but we did a lot of work today. So I added a couple trades into today, and I'll look for more weakness in September to kind of to deploy some more risk. But right now, sitting on a pretty big cash balance. All right, guys, thanks for watching the video. Have a great night. See you tomorrow.